From bar to barley, net zero cleared for liftoff. There are major movements happening behind the scenes in the carbon markets. You wouldn't know it because of the recent price corrections of the EU ETS and voluntary markets such as the NGEOs or GEO price caused by the Ukraine and Russia crisis. So look at the price rate now, the carbon market performance, the black line, you've seen the EU allowances, the green line, the CBL nature-based offsets, and then the GEOs, which is the orange line. While a calm breath was needed from the fast-paced price spikes, especially in the EU market, I've never in my career seen a coordinated regulatory framework accelerating at this pace between world governments and major corporations. Carbon markets are moving fast. The Secretary of the SEC, Gary Gensler, recently made a major announcement that his department is looking at climate disclosures. With new guidelines potentially coming this year, in his words, it's essential we get this right. I don't think 99.99% of investors understand how this could have a massive ripple effect on every single publicly listed stock in North America. Companies will have to create new departments to deal with the climate accounting in their financial statements. And it's coming quicker than you think. According to the Washington Post, under a groundbreaking new rule, the SEC expected to propose hundreds of businesses would be required to measure and disclose greenhouse gas emissions in a standardized way for the first time. The article goes on to reveal the move could mark the most sweeping overhaul of corporate disclosure rules in more than a decade and could put the US on a close footing with the other countries set to begin mandated emission reporting over the next 3 years. Tock. The alarm is set. Fortunately, at Katusa Research, we prepared for this over the last 18 months. But I must say that I'm shocked at how fast things are changing and getting implemented. It's exceeded my own expectations. We've modeled many major commodity companies in the energy and metal sectors and what the effect of showing Scope 1 and Scope 2 emissions would be to their bottom line. Some companies will be fine, and others will be in big trouble. From barley to bar. Major tech darling companies like Tesla, Facebook, Apple, Microsoft aren't out of the woods either. However, they're much more ahead of the game than many resource companies. They've outlined net zero plans and are spending a lot of capital to achieve their goals. For example, in 2021, Apple set aside $200 million fund for forestation projects. The Restore Fund will focus on managed forest properties in which tree planting activities will become equal to the estimated lifetime carbon emissions produced from charging iPhones. Like Apple, Microsoft is also aiming to recruit the help of its suppliers and customers through a climate innovation fund valued at over $470 million. The fund will help the company improve its global development technologies to streamline reducing, capturing, and removing carbon from the atmosphere. Most of the carbon emissions produced by the company come from indirect carbon emissions commonly associated with the manufacturing and productions of its products. In 2021, Microsoft emitted 14 million metric tons of carbon, and 13.8 million of those 14 came from indirect carbon emissions. Even liquor giant Heineken is not immune. One of the largest liquor companies in the world, Heineken set an intermediate goal to reach net zero in emissions in production by 2030 and reduce their value chain by 30%. Their plan is called Brew a Better World, from barley to bar. Let's hope they get it. First, the storm. According to the Glasgow Financial Alliance for Net Zero, GFANZ, which was part of the COP26, $130 trillion has been mobilized for net zero targets around the world. That's a mind-boggling number. Nearly $18,500 per living person on the planet today. GFANZ also says that over 3,000 companies have committed to net zero targets, while over 5,000 have committed to science-based targets. These are staggering figures. Decarbonization is a global movement that governments, companies, and individuals around the world are buying into. Look at the decarbonization as a global imperative in this graphic. These days, it is nearly impossible to find an asset class which is not already widely available for purchase, sale, or consumption worldwide. Markets these days are deep, well integrated, and for the most part, highly efficient. That wasn't always the case, though. Let's take a look back to history. In 1611, the Dutch East India Company became the first publicly traded company on the Amsterdam Exchange. In the late 1700s, merchants would gather to sell securities in New York, initiating the creation of the New York Stock Exchange. Soft commodities like rice, grains, and salt, along with gold and silver, have been bought, sold, and traded in markets for centuries. Oil is now a multi-trillion-dollar-a-year market. I believe that the voluntary carbon market has the ability to grow from a sprouting $1 billion a year market to 5 to 10 billion market or more over the coming decade. Now, you could imagine being part of the oil trade in its early years, right? This is the stage I believe carbon markets are at right now. The next 24 months will see incredible sector growth. The adoption curve is real. Network effects are already in play, with hundreds of public companies announcing their net zero plans. The rules, regulations, opportunities, and pitfalls are being created before our eyes today. If you don't understand the market, the players involved, in the direction the market is going, you could lose your shirt, house, and everything. That said, newly created sectors are also generate enormous opportunity to create wealth. With any new commodity or sector, thousands of rounders will crop up overnight. Hundreds of legitimate companies will spring up too. Only a small handful will actually make it to the big leagues. 10% of your investments will make over 90% of your profits. What if you knew which 10% those were and you could put money into them? Franco-Nevada and Silver Wheaton were the two set it and forget it gold stocks in the early 2000s, owing entirely to their streaming and royalty business model. And I think I found the next Franco and Silver Wheaton in the carbon sector. Subscribers to the KRO, which is Katusa's Resource Opportunities, know exactly what I'm talking about. We're early. We're actually very early. But this is going to be one hell of a wild ride. Stay safe. Subscribe to the KRO, which is a Katusa Resource Opportunities, to find out exactly what prices I'm buying at and what price I sell at before the trade occurs. And you get to sell before I do. If you want to give your portfolio an edge, consider becoming a member and giving it a try for yourself.